Stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
Welcome to another edition of Zacks Top Stock Picks. I am Brian Boland. I am the aggressive growth stock strategist here, and I am presenting my top stock pick for the week here early this Monday morning, October 25. And it's Tesla, TSLA. I've been a big fan for a very long time, and we're seeing the stock approach $1,000 again, which is good to see. It's a Zacks rank number 2. That means it's a buy. With a B for growth and an F for value, and I love to see that. I love to see that growth divergence, a strong growth score and a weak growth value score tells me that growth investors are looking for this one. So I like that name. So Tesla had some big news today. They have Hertz buying 100,000 automobiles from them, which is wonderful. Wonderful for them. And it gives people a chance to be in those cars a little bit longer, things like that. So you're going to see some great things. Obviously, and then last week, just at the end of the week, we had a nice big earnings surprise, 33% above the expectation. Now, of course, what does something like that do? That ends up pushing estimates much higher. Look at these numbers: $1.46 to $1.61, 153 to 156. I think that number might has some room to really move up much higher. For the year, 506 to 559, which is nice, but here's where everyone's really looking, and it's next year. So 686 bouncing all the way up to 723. I bring this up right here, this topic. It's called window dressing, and I went to the Investopedia just so that you know that this is a real thing. End of the month of October. I mean, this is the prime time for the larger hedge funds, your Fidelities, your Vanguards, your big spots, where their year end is the end of October. They're going to want to have a lot of Tesla on the books. They're going to want to show that to their investors. So that's kind of helping the stock as much as anything is right now. So a little bit of window dressing out there. And that's why it's a top stock pick really for the week here. We're going to have a big valuation because you're seeing big growth from a big company. Those are all big numbers. But when you see margins, I mean, lifting like that over the quarters, I mean, pretty soon they're going to be at 10 to 15% margins, and on even bigger numbers. This thing's just going to the moon. Just going to the moon. That's what I say here. Look back here. Woo-wee. That is nice. You can see when the earnings numbers start really lifting up there, that's when the stock really takes off. So good luck to Jim Chanos. Probably still short, but what are you going to do? He begged and cried. He changed his position to options up here before, came back in. I hope he got out. I hope he got okay. But he is back to the same old spot here. Probably a widowmaker on the Tesla short. But look for that window dressing to continue to be a big factor. All right, that's it for me. I'm going to hand this over to Dan. Dan's going to talk about a financial powerhouse. All right, take it away, Dan.
Thanks, Boland. Today we're talking about the king of high finance, Goldman Sachs. They did it again this quarter with an outrageous beat on top and bottom lines as deal making hits record levels in 2021 as companies rush to consolidate into this new normal. Right now, Goldman Sachs, which I said this past quarter, Goldman Sachs just reported a return on equity of 25.7%, which is way above any of its cohorts. And they're doing this through all of the levers that David Solomon has pulled through this pandemic, which has just been taking advantage of opportunity left and right and illustrating that they are a leader in this space and are here to stay. They're the go-to investment bank among corporations, and they're poised to explode going into this roaring 20s where deal making and company evolution into this fourth industrial revolution will be at the forefront of investors' minds, and they're going to be going to Goldman for their deals. And you better believe that Goldman will be there to pick up this demand. So let's take a look at the charts and take a look at the opportunity. Goldman has just powered its way to all-time highs, continuously all-time highs throughout this pandemic. Like I said, they're pulling all the levers in the beginning. They're taking advantage of the trading opportunity with huge volumes driving the trading segment up. Then they took advantage of wealth management as investors come in and decide this is the time to buy, and their wealth management side was able to drive a huge amount of profit for not just their clients, but for their shareholders as well. And now we're looking at M&A opportunities as well as investment banking segment growth, which a slew of IPOs and a slew of deals occurring in this market that just continue to drive this company to record levels. We've been seeing that throughout this the last 4 quarters, just blowing past analyst estimates by massive percentages. And it's reflecting in the stock price right now. Over the last year alone, we're up over 100%. And I'm looking at a price target close to 450 right now. We're trading at about 416. We got a resistance level right here, right at 420. But if you're looking at our latest fib drawn from the highs we hit at the end of August to the lows right around September 20th, as well as the October 4th lows. So it's kind of a double bottom here, putting in a 161.8% fib target here right around 450. And this is short term. Long term, I'm looking 500 plus for this company. Like I said, David Solomon has been a huge asset to this business. Coming on a couple of years ago as the new leader, and he's really proven himself as a savvy head to this investment banking crown. It is the gold standard of Wall Street and will continue to drive higher and higher. Right now, it's trading at a price to book that is below its cohorts. And I say that this stock, even though it's had this huge run, it still has significant amount of upside from here, just breaking above its 50-day moving average last week. And like I said, I think we've got a huge amount of upside moving forward. As I said, Goldman Sachs continues to blow past analyst estimates. Analysts are getting increasingly bullish, raising price targets. Right now, I'm seeing a optimistic price target close to $600 a share. Like I said, we're trading at about 4 to 15, and that's a huge upside from here, about 50%. And we're looking at forward guidance that continues to be pushed as David Solomon ushers in this new generation of finance, and he's taking advantage of every opportunity that presents itself. Like I said, this company is just in the beginning, nascent phases of its growth, despite Goldman being a big name in finance for decades in the past. I think this company is going nowhere but up as we move into this roaring 20s. So don't forget to check out Zacks.com/promo, where we have the home study course. So check that out. Once again, Zacks.com/promo. Thanks for watching, guys.